let's say hi to our CoinDesk Global Policy and Regulation Managing Editor, Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Hello there, Nick. So Galaxy Digital announcing that they've just filed for a U.S. Bitcoin futures ETF. That's a wise move considering SEC Chairman Gary Gensler has signaled that he prefers ETFs based on Bitcoin futures, right?
Yeah, so this is all kind of based around a speech that SEC Chair Gensler gave a couple weeks ago at the Aspen Security Forum, basically saying that he is a lot more interested in ETF applications based on futures and filed under the 40 Act, or I forget the exact name, but an investment act regarding regulating securities issued in 1940 versus the Securities Investment Act of 1933, which is what most ETF applications have been based on, at least up until a couple of weeks ago. Galaxy is not the only company to file a 40 Act filing. There's been quite a few, in the last week or so, especially. But it is, the latest signal that these companies see, there's still being a very real chance that an ETF will be approved in the near future. And, they see Gensler's recent comments as an endorsement of that idea.
So what does this mean for the turf war between the CFTC and the SEC? Do you think that now that it's going to be based on futures, do you think that it gives the CFTC a little more power in this situation, or is it actually going to benefit the SEC?
I think it's the SEC kind of endorsing the CFTC's view that Bitcoin's a commodity, but more importantly, that the Bitcoin futures market is regulated to some degree. Gensler isn't making this comment if he thinks that Bitcoin futures are as subject to manipulation as he's said the spot market is. The CFTC's overseen regulated Bitcoin futures in the U.S. since the end of 2017, and that seems to be giving, or that might be giving, some small level of comfort to the SEC that sees this market as being perhaps safer for investors.